Welcome to Markets Now. I'm Michelle Roque with Chip Nellinger, Blue Reef Agri-Marketing, and we ended mostly higher in grain and livestock futures trade on Friday. And Chip, let's start off with soybeans. It was a tough week to start with new contract lows on Wednesday and then Thursday before we bounced. What do you think about soybeans? Do you trust this rally, or was it just a technical bounce?
Yeah, I think it was a technical bounce spurred by the rumors Friday morning of Chinese bean purchases up to 500,000 tons. I don't really have confirmation of that yet, but the market seems to think that is a real deal and that happened. So that surprised the market. We were extended to the downside, a little bit oversold. And so I think it's just a reaction and some short covering. The funds have a big short in beans. The question is there some continuing short covering going into year in? We've got 8 trading sessions, and a couple of those, or at least one of those, is a early close on Christmas Eve. So the volume's going to get thin here, and the funds have to decide what they want to do with their positions going into quarter and year end here very quickly.
Yeah, so you would expect maybe they would cover some of those short positions here to end the year, take some profits. The rumor you mentioned about Sino Grain was, I think, the firm that came in and bought 500,000 metric tons of U.S. soybeans this week. That was for the reserves, right?
Well, it was at first glance. There's one school of thought that they're front running the new administration and are going to use that as maybe, a club, to kind of turn back on us, so to speak, if there's immediate tariffs that go into effect. Or some of these restrictions and economic problems in China, versus this trade war. There's some thoughts that maybe they could turn that around and just immediately cancel that as kind of a retaliatory sign. And so I don't know. It does make you scratch your head a little bit, especially since we're really knocking on the door of what looks to be a massive record Brazilian bean crop. They're cheaper than us right now anyway. And so the timing of the purchase and the size of the purchase does make you scratch your head a little bit.
Part of the reason given for soybeans going down so hard on Wednesday was that the Brazilian real collapsed to the US dollar. And as a result of that, maybe we saw a little bit of a bounce here today in the real, and so soybeans followed. Do you think that's part of the story too, or not?
Yeah, I definitely think that's part of the story. On top of that massive crop that it looks like they have coming, their farmer down there remains in a very competitive position as their currency devalues against the dollar. That means the U.S. farmer is feeling the pain of the big drop into contract lows early last week, but yet the Brazilian farmer sitting down there really not seeing much of a price difference because their currency is moving in their favor. So that just keeps them in a more competitive standpoint, makes it easier for them to sell, and they have a lot to sell because it does look like there just has not been a weather problem really since the very early stages of planting when they were too dry down there. They got some rain to get the crop in the ground, and it's been perfect ever since.
So from a technical standpoint, January beans closing back above the previous contract low of 973.25. Does that negate some of the action or technical damage we did this week?
Yeah, you have to kind of see, the next few trading sessions, how we act. I wouldn't say it negates it. You have to kind of stand back and say, well, the bean market closed almost 35 cents off of the worst levels last week, in that March contract. So could that be a short-term low? Yes, but you've got a massive amount of overhead resistance, really kind of starting around $9.85 all the way up to $10 in that March contract. So plenty of resistance above us. It just gets back to what you said. With light holiday volume, the funds do one of two things typically. They either take money off the table and take profits on positions, which possibly could be happening in the bean complex, or sometimes they add to their profitable positions, which looks like might be the case in the corn market. So, there's going to be some push and pull and give and take. If it's the case where they want to come out of some more shorts in the beans, then there could maybe be a little more upside and maybe push this thing back to $10 or slightly north. But at the end of the day, with the big crop coming out of Brazil, I think it's a sell, and I think the Brazilian farmer is sitting there hoping for a rally because they have a lot more beans to price of that big crop that's coming in short order with a matter of several weeks.
Corn held up better when soybeans collapsed and actually are closing higher for the week, but we are still unable to get through resistance levels? What will it take to get us through those and when?
Yeah, again, I think I'm getting a sense that the funds in the case of corn are going to take the path of let's add to this profitable position going into the end of the quarter and into the year. If that's the case, I think they're going to try to challenge the 200-day moving average, which comes in right about 450 on the March. It's sloping down. If you get above there, I think getting up towards 455 to low to mid 460s is the next target. So if it's the case where the funds want to add to the longs, their long position in corn, I think we could see, a close or two above the 200-day moving average, and that could propel us up into the low 460s, and that would be, a definite territory to, reward this rally going into year end.
So that begs the question: the strength in corn, can it continue to pull soybeans along, or if we get South America's crop confirmed, will soybeans keep a lid on the corn market?
Yeah, that is the question. I think at different times you're going to see some push and pull each way. I think early in the week, last week, you saw the bean market drag corn lower with that weakness. Late in the week, you took some of that fund selling pressure out of beans, and corn had a nice rally, and it was able to, drag beans off the low. So I think it depends on the day and the week. I think you're going to see that battle go on, really through the rest of winter into early spring. That begs the question then going into spring, what's the ratio look like? Looks to me like it's favoring corn acres over beans, and you're going to play that game pretty quickly after the January crop report all the way into the March acreage report.
Yeah, I was going to say right now the acreage battle corn is winning, isn't it?
Corn looks like it's going to win to me, especially across the more productive areas of the Corn Belt, the highest yielding. I've talked to several producers in Illinois and Indiana that are making switches, more corn acres, not massive amounts, but 200 acres here, 300 acres there. Pretty quickly that adds up and can mean 2, 3, maybe 4 million corn acres. It's going to be an interesting battle as we go forward here into that March acreage report.
Right. We'd ended mixed today. We did score new contract lows this week in Chicago and Minneapolis wheat. I know that the dollar has been a headwind, but the wheat market, is there any hope for that market right now?
Yeah, I do think there's hope, and I think maybe you hit the nail on the head with the Federal Reserve move, kind of late week last week. You saw the dollar rocket higher, and that was just too much for the wheat market. But fundamentally, nothing's changed. In fact, you saw some news that maybe things are tightening up a little bit in the case of Chinese stocks. They may have less to export than what was originally thought. So world wheat markets seem to be creeping just a touch higher. There is still some hope there, but as you mentioned, the movement in the dollar, that strong move higher after the Federal Reserve announcement, was more than the wheat market could handle and pushed it to new contract lows, unfortunately.
Yeah, that happened on Wednesday for sure. When will the market start recognizing? You talk about global stocks being tight. Russia's crop is pretty tight. Is it too early to be trading that, you think?
Well, I don't think it's too early, but the market still does not seem to care. I think the market does wake up every morning and look at European and Russian wheat prices. Now, they've stabilized and they've just gone a tick higher, but they just really haven't started into a big move higher yet. So I think the wheat market is just kind of watching world wheat prices until you see a big push higher in either Russian or European wheat prices. I think that the bears remain in control, but it can happen pretty quickly and unexpectedly. But until the world wheat price situation starts rallying, I don't think that we've got much of a bull case going in wheat futures anyway. But that could easily happen. I would expect that at some point over the next 60 to 90 days. But right now, it doesn't look like the world wheat prices are doing too much to the upside.
Got it. Cattle market ended higher today, but we're going to have a weekly reversal down. Has the market topped? I mean, we did it with news of steady to better cash trade, which that divergence doesn't look very good.
Yeah, again, coming into the holidays here in light volume, you could have really strange moves. I think that the lows last week in the cattle market are extremely important. You touched the 200-day moving average. You've got a trend line off the 2 previous lows. I think if those lows give way, given the size of the fund long, you can really see a $6-8 sell-off very quickly. Now, if it's the case like we talked about in corn, where they want to defend that long position and add to it going into year end, we could be right back at contract highs pretty easily. So even though the volume's shrinking, the cash market seems stable. I think it all comes down to what the funds want to do the last 7 or 8 trading sessions of the year.
Yeah. And if they take profits there or not, and that's kind of true in both cattle and hogs, really, isn't it?
Yeah, it really is. Big long positions in both those. In fact, recently record length in the hog market. So they've come out of some of those positions, and we saw that break off the highs. But both the cattle and the hogs, and feeders for that matter, have large net long positions built up by the funds. And, it's been a good run higher. But oftentimes the counter move, the exit move really can push things. So we really have to keep an eye on that. But fundamentally, underscoring all this, I think a lot of people are out there hoping and wanting a break in both hogs, feeders, and cattle to buy that break for the first quarter of the new year. Whether we get it or not is another question. But all comes down to the funds, unfortunately, the last few trading sessions of the year.
Yeah, and it can be kind of wacky the last couple of weeks just because of the light volume you mentioned earlier. So we'll keep an eye on that. All right. Thanks, Chip.
Thanks.
Chip Nellinger, Blue Reef Agri Marketing. That is Markets Now.